In this video, we'll be going over the latest research from ARK Invest. This is the Bitcoin monthly. It's going to tell us exactly what's happening under the surface, where the demand is coming from, if it's actually healthy and going to continue, where we are in this bull market. So we'll be going over that. Also this from the Bloomberg analyst right here. We still believe a 90% chance by January 10th for the spot Bitcoin ETF approvals. So things are getting heated. The market is taking its positions. And actually, as of today, there is a window where the SEC could approve these applications. There's a short window here, and if they don't do it by then it gets pushed out to January. And so the market is taking speculative positions here. So there are opportunities, a lot is going on. You can feel the FOMO coming back in because I think we all know the destination here, which is the ETFs are coming. Whether it's now or in a few months, doesn't matter. And then you have the halving, and then you have rate cuts coming sometime mid next year. So it's all lining up for the next Bitcoin bull market, which is why the market is pushing the price up. Now, what I would say to you at this level is that this is just absolutely major resistance, right? This 40K level. You can see that here. This is in the previous bull market. Then we came down and found massive support there. We found massive support again. And then that break of this was actually the start of the bear market, in my opinion. So this 40K is a massive level, just like 30K was, 40K will be, but we all know it's going to break it at some point, right? We know that. Now, I think getting upset over if it's going to be 37 or if it comes down, like if the FCC kind of pushes it out to January and it comes down to 35 or comes down to anywhere else, like it's pretty irrelevant at this point, right? And the market knows that as well. And that's why the market is just continually pushing us up and up and up day after day because they need to get their allocations in. It's so obvious what's happening here. Whether the SEC gives the go ahead in the next few weeks or in January or maybe pushes it back, they are coming. This asset is growing still. And so it's very obvious. And of course, for me personally, any dips that come, so if the SEC pushes back the application and a dip comes because you've got some leverage traders coming in who get kind of, taken out of their positions, that is an opportunity for long-term investors to just keep buying those dips. So we're in a bull market, in my opinion, and you buy dips if and when they come. That's just my opinion. If you're a trader, check out the deposit bonus to Bybit. I trade on there. You can get up to 30K deposit bonus. Check the link in the description for that. Just make a deposit and trade, you get that bonus. The ARK Invest report is very positive on Bitcoin and what's happening. That's because the underlying data is positive. But let's have a look to see if there's any things to worry about right here. So this is network data. So you're looking at network security, as they say, which is just mining difficulty. You're seeing positive stats across the board. So I think there are just more people trying to mine Bitcoin, which obviously increases the hash rate. And that's just a healthy sign overall. Network usage, you can see active owners is up year over year and month over month. Transaction volumes are down a little bit year over year. Funnily enough, about a year ago was the FTX disaster. So that was this right here. So obviously a huge amount of activity around this time. What we're seeing is that activity come back actually to the upside right now, which is obviously very positive. It's only 20% below. I'm sure it's going to keep moving upwards. And then you can see holder behavior right here. We can see this is up as well, right? So pretty strong stats for the network generally. And of course, as the price goes up, that will all be pretty positive. What we can look at also here is the cost basis, which I think is important. So the cost basis is just going to rise over time, right? If Bitcoin keeps getting adopted. So if you are a long-term investor, you can see the market cost basis around 20,000. So that is up a little bit. It's down over the year. So, I still think the price is towards the low end. In fact, if we look at the long-term cycle, which we'll go through, we're still towards the low end of the cycle. So this is Bitcoin's logarithmic chart. And I've just drawn 3 lines on here, which is the lower trend, kind of mid trend, and then the upper trend, which is where the very top of the bull market is. You can see where we are with the price here. We're still towards the lower end. So for me, as a long-term investor, I just want to be accumulating as much as I can down below these levels, right? So anything below this orange line is just absolute buy zone. And to be honest, it depends what your time horizon is, right? So if you were buying down here at the very top in 2013, you were buying at $1,000, right? So those purchases would have looked really bad when the price drove back down to $200. But if you just held for, a few years, let's say 10 years, you're now at 35,000, right? So you're 35x what you bought then. So it depends on time horizon. But if you're looking to be a little bit more active, you want to be very active towards the bottom end of Bitcoin's price cycle, given that the secular trend, right, is to the upside. And if you continue to believe that. So right here, anything under this line is, for me, just still, consistent buying. The price might go down 10, 20%, might go up a little bit. It doesn't matter. Under this line in the long-term secular trend is, still buying zone for me personally. Anyway, you can see short-term holders, their price is around 28,000 right now as well. That's up a little bit. So, under this price, what we also get, at the start of bull markets is that more of the network actually becomes into profit. Now, when things get a bit overheated, of course, then you can make a decision. Do you want to maybe stop dollar cost averaging? Do you want to hold back a little bit? Do you actually want to sell some? For me, that is not this point in the cycle, right? We're still coming out of the bear market and into the bull market. And so for me, the next part, you can see the green expansions here. The blue lines are halvings, right? So that's the expansion. That's the expansion right here. So we haven't got that massive expansion yet. That's going to be coming after we get through all of kind of the recession fears, when interest rates are down a little bit lower again, and maybe if money printing comes back, then debasement of currency is going to push assets like Bitcoin higher. So we're nowhere near that yet. So happy to, keep dollar cost averaging up here. When things get very overheated, maybe some people can take profits. I'll be making updates around that because a lot of on-chain data shows you exactly when long-term holders are taking profits, and they typically take profits when the price goes up a lot and, incentivizes them to sell. As of right now, you're seeing the start of a bull market, but certainly not mature in this bull market at all. So for me, still aggressive, waiting for a really much bigger move to the upside. Where some people may get caught out is getting a little bit over exuberant at this stage, because there are still things that can happen. The economy can fall apart. There can be some sort of, risk off event, like a credit event in banks or somewhere in the economy. And that can drive things down. And because that will happen quickly, and we just don't know how fast the central bank's going to step in. Now, for me, personally, I think the central banks have actually already stepped in this cycle. When the regional banks started to fail, the Fed stepped in and they created the BTFP, which was essentially more money printing, right? So it bought all of the government debt off the banks at par, even though it's trading below par in the market. For me personally, that was the Federal Reserve and the central government stepping in already. So for me, that was the thing that they had to step in on. And they're probably going to keep stepping in. And anyway, if the banks have some real big problem, they can just sell their government debt back at par anyway to get liquidity. So for me, that was one of the steps that they took. If something else happens, I assume they're going to be quick on the trigger again. And so we're in a regime now where governments aren't slow to react like in 2008. It seems like they're quick on the trigger, and that just means more monetary debasement over time, and that benefits BTC. So what we can see here as well is this is the AVIV ratio, which is actually a new ratio created, I think, by Glassnode and some others. What is AVIV? AVIV divides the active capitalization of Bitcoin supply moved by the cost basis of the investor cohort. When AVIV equals 1, these investors in the secondary market are at break-even levels. What AVIV tries to do is just take out all of the coins that are essentially not in use anymore. So you're not looking at stats on coins that have been dormant for a very long time. So you're looking at kind of a real analysis of where the market is right now. Now, you can see a lot of drawings I've drawn on here. Essentially, when AVIV is under the line, under 1 right here, that is when Bitcoin is cyclically very low in its price in comparison to its long-term uptrend of actual network growth. That's when you actually want to be buying. So you can see that here. We have been in that, and now we're climbing out of it. So again, I just think that the lows of this cycle are in, it seems, and we're moving out. So for right now, like I've said in previous videos, time is running out for this price cycle, where the 15, 16K purchases, they seem a long way ago right now. And so we probably aren't going back there unless something absolutely fundamentally breaks. So time is running out, but we're not at the peak yet. You can see the red arrows here is when AVIV peaks. That is the top of each bull market. So again, we're not there, but we're coming out of the bull. We're coming out of the bear, moving into that. Now, what we can also see is in the previous cycle, we had a double dip, we had a double bottom. You can see that here. So we moved out very well and then went back down. So that could be something that happens again. This is AVIV. It's not the actual price. It's just AVIV, right? So what could happen is the price could move extremely to the upside and then have a sharp drawdown from there with AVIV going down. But the actual price may still be higher than the actual price bottom at 15. In any case, this was the pandemic. And so a black swan drove us there. So you can't really invest for that. I think generally, look, the thing's going up in value over time. I actually think it's as simple as that. So you either want to be involved and you're getting involved at lower levels when the price cycle is towards the bottom or not. We're seeing this move up, right? And so, yeah, not the absolute top of the bull market, but again, strength is coming back into this. This data shows it as well. Long-term holder realized returns suggest that Bitcoin has entered a risk-on environment. Consolidating slightly above 1 or at break even. The SOPR suggests that the bullish primary trend is in its early stages. So we can see that here in previous cycles again. So we have this, moving up, and then you get the really big kind of bull market blow off top, as you can see here. And then we have that here in the previous cycle as well. And then it looks like we're starting to come into it again. Now, for me, that really big move to the upside comes when the central bank prints money. And we just don't really know if that's going to be happening or to what extent. We've all seen the debt construct. We've all seen that the debt is unaffordable. And so someone has to buy that debt. But the recession is needed, or a growth slowdown is needed, so that people and the market expects the Fed to come in. Because if the market expects the Fed to come in, then they'll actually start buying treasuries again. So it's like this kind of weird thing of the market expecting interest rates to go down, so they buy treasuries. Buying treasuries forces the prices up, interest rates down, which means that it's easier for the government to then just issue more debt. And so the government has to issue more debt. It has to, because it cannot afford to pay its bills. So more debt is coming, and what the government really needs is lower interest rates. And so what they've done is they've created a growth slowdown and a panic and told us all that the world is going to end, so that we reduce our demand and that we create this short downtick in inflation and demand. So next year they can say, look, demand is low, let's start buying government debt again and force interest rates down. So that's just the cycle. It's the macroeconomic cycle. When that happens, the next stage is for that to happen, in my opinion. So interest rates lower, maybe the Fed starts buying more debt. That's going to push Bitcoin up in price. Very, 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 very volatile though, because the Fed can't really buy debt unless there's a reason to buy debt. And that reason has to be a massive slowdown where they say, look, growth is so slow, we need to pile in and force interest rates lower again and stimulate the economy. So that is going to come. And of course, around that is a lot of volatility. So that is the opportunity of BTC. As I said, if dips occur, I'll be actively buying them. They may occur, but we can see the general trend with Bitcoin is that currencies get weaker over time, right? The government is indebted up to its eyeballs and it can't get out. So the offshoot to that is that BTC is continuing its uptrend in adoption with a fixed supply, forcing the price up as more demand comes in. And we know the ETF is more demand. TradFi wants this as well. That's where the demand is coming from. Great analysis here about Bitcoin cycles as well. If you are looking to trade this cycle and you're looking to maybe, take some profits and, lock in some gains and maybe put it into a different asset, maybe a lower volatility asset, or, pay down some debt that you have if you've made gains investing, how long have we got? So what you can see here is the blue line is 2011 to 15 cycle. Then we have the green line, which is the 2015 cycle, and then the 2018 cycle in red. Black is the current cycle. This green arrow is the Bitcoin halving this time. So around April 2024, spring next year is the Bitcoin halving. That's when it takes place. You can see what happens after each Bitcoin halving. The price goes up, right? It's not difficult because the supply of Bitcoin, or the supply of new coins, gets halved and demand stays either the same or rises over time, as we've seen in previous cycles. So we could expect that the ETF and TradFi coming on board to Bitcoin will increase the demand or the inflows into Bitcoin. The amount of new coins and supply that is getting supplied over time is going to get cut in half. So a demand increase and a supply cut, only thing that can happen if the demand is there is to raise the price to incentivize existing holders to sell. So how long have we got? You can see where we are here. the halving is where you get the new real bull market and the new all-time highs, and it's going to come around this time here. So that could be maybe 2025, end of 24 to the beginning or mid of 2025 would potentially be a cycle peak where you're getting, just eventually the supply and demand coming into balance again with maybe, more supply at those levels because the price is higher, and maybe you're going into maybe the next downturn in the economic cycle. So the price cycle may go down again, but that's where we are. So again, we're well early to be doing anything apart from still buying here. And as you can see, each cycle has a lower percentage gain, right? So that was the 2011 cycle, and then the 2015, and then you're looking at the 2018 here. The percentage gains are much lower. In terms of percentage gains for this cycle, it's difficult to suggest. I think 100K, 100,000 Bitcoin is a round number where a lot of people are looking for, right? So what you're seeing from a percentage gain standpoint from the low, you'd probably be looking around that level. So if we have this, 100K would be, 600% from the low, something like that, 700%, which is totally doable for Bitcoin in this cycle, in my opinion, from the low, 15K up to 100 something. Seems like something that could easily happen. I don't have any idea about prices, but for me, it's about timing, and central bank cycles. The central banks really give us every piece of information we need to know about the price cycle. They're going to tell us when they're pumping the markets because they want things to go up. They're going to tell us when they want us to, stop demanding things and prices go down. So they really control the price cycles, but the longer term trends they cannot control. So I take my cues from the central bank and time rather than price. But around this time would be, actively looking of like, do you want to take profits? Do you maybe not want to buy again? What do you want to do? But we're not there yet. This is a great chart though. If you're a trader, check out the deposit bonus to Bybit in the description below. Just click that link. You can make a deposit and trade up to 30K. Also, if you do have the crypto investor course, I'll be making updates for you guys towards the turn of this year because the cycle is changing and turning. And so I've been very active buying throughout the bear market, but obviously we need to make sure that we're, not getting caught offside or, buying at very high prices. So I'll be making some updates on my research. That comes free for course members. If you aren't a course member yet, check the link below as well. You can see all of the lessons and updates come for free in there forever as well. So check that details below. I'm James, my name is G. Cheers for watching, and I'll see you in the next one.